IPOs now. Travel Food Services is what you're looking at. That's the IPO that opens today with the company looking to raise about 2,000 crore rupees. Let's bring in my colleague Mahima yet again with more on this one.
Right, so Travel Food Services Limited is set to open its IPO today from 7th of July to 9th of July. The price band is set between 1045 to 1100, and it's interesting because this is entirely an offer for sale in terms of IPO of 2,000 odd crore, and market capitalization at upper value of band stands at around 14,484 odd crores. The lot size, minimum lot size is 13 odd shares. The company is basically a leading player in the fast-growing Indian airport travel quick services, restaurants, lounge sector. In terms of the financial, if we compare the YOY basis as compared to how FY25 fared, revenue saw a growth of around 21%, EBITDA 34%, and profits at 27%. So this is everything that you need to know about TFS.
Alright, then that's everything that you needed to know about TFS, but let's move on from the update coming in as far as TFS is concerned to some stock-specific news. Chennai Petroleum is the one that is in focus as the company shows its dominance in the sector with a year-to-date change of about 22%. In fact, we have Somi joining us to give us a little more update on the company and how the company has performed against peers. Over to you.
Well, yes, Chennai Petroleum in the oil marketing and the refining space has been a clear outperformer. As you can see in this table here, in the last 1 month, the share price of Chennai Petroleum have gained nearly 19% as compared to that of BPCL, IOCL, HPCL and MRPL, where gains have been anywhere between 7 to 9%. So a clear outperformer that we have seen by Chennai Petroleum. Now, why this outperformance? Because of the rising or the higher Singapore gross refining margin and gross refining margins on a sequential basis. Now, if you look at the Singapore gross refining margin, they are the highest in the last 7 quarters. In the first quarter of FY26, they have averaged at around $5, which is the highest that we have seen since the third quarter of FY24. And so far in the second quarter of FY26, they're averaging around the $5.1 per barrel mark. Now, what is a GRM? That is the gross refining margin. This is what an oil refiner earns by processing every barrel of crude into usable products like diesel, petrol and ATF. And why Chennai Petroleum here is gaining? Because all oil marketing companies like IOCL, BPCL, HPCL, MRPL and Chennai Petro do the same thing of refining crude. But why Chennai Petroleum is gaining here? Because it's a pure play refiner, unlike the other oil marketing companies like IOCL, BPCL and HPCL.